Let's go to the trading floor in Chicago and sort it all out. Let's talk with Scott Gecas of the Fox Group. He joins us now. What's the attitude on the floor today? I know it's been kind of bitter all week long.
Yeah, it's been bitter all week long. Volatility is running through the roof. It's rampant pretty much on any contract that you can think of. Anywhere between 50 to about 65% over the 20-day historical volatility. So that just tells you that there's a lot of fear. No one knows what's really going on. Picking one direction versus the other has been a really hard game. A lot of people are just focusing on the headlines. The coronavirus is definitely in full effect, a main focus on any market that you can pretty much think of. But when you start looking at the grains, you start looking at cumulative sales. They're starting to be below the 5-year average. Soybeans was below last year's average. The weekly exports were weak in soybeans and weak in wheat. Kind of right in the range with corn, so that was a little bit supportive. But corn's been holding on mostly versus all the other ones, even though it's still in a downward trend. It's been the most resilient market of all the grains. So we're going to keep an eye on the positive things with that. But either way, we need a lot of different information. We need some type of containment with this coronavirus to get anything moving, to get that build up to the upside momentum.
This morning we had an overnight sale of soy meal to the Philippines. It was 135,000 tons. Soy meal has been trading a little higher today. And let's take a look at the futures here if we could. There's that overnight sale. Yeah, 135,000 tons. So that was a fairly significant total. Now, if we can look at the meal prices here, let's take a look at what they're doing. They are higher today as opposed to the oil. These show the May contract up $1.80 at $305.40 per ton. But the oil, the soy oil, is actually going the other way, and we have the May down 63 points at 28.56. And that is still under pressure from that very low Malaysian palm oil futures market that is at 4-month lows. All right, we'll come back in a moment, and we'll take a look at our livestock trade with Scott Gecas right after this. This market is not for the timid. Let's go back to Scott Gecas at the trading floor in Chicago. Well, I tell you what, the market is probably blowing a lot of people out of their positions this week here.
Yeah, again, that's why you use options for protection, but whatever. Yeah, I mean, these crazy volatilities moves that you have left and right, I mean, it's either going to make or break the day trader or short-term trader, however you want to look at it. It's definitely not for the faint of heart, but moving all these markers around left and right. One thing I want to just mention real quick, when you're talking about oil, you were saying the price of oil is roughly around 44. Now, look for OPEC to start cutting production just because their break-even point is roughly around $40. I just want to make that quick mention. So keep an eye on that. Keep an eye on for that headline. But when you're looking at the cattle market and the hog market, the virus is definitely playing into effect because you're looking at it slowing all the restaurants down, to travel down. It's taking that hopes that China was going to become a buyer of U.S. beef. Now, there's rumors that could come to an absolute complete halt. So we have that, and we have the break of cash. So that's why you're seeing a lot of downside pressure with the cattle market in particular. Same thing with the hog market left and right. It's all over the place. We need something to make these markets move a little bit higher. Otherwise, we can consistently are going to start seeing downside pressure still.
All right. Thank you, Scott. Well, I hope you have a good weekend and rest up. It could be even crazier next week. You never know. Scott Gecas happens to be with the Fox Group. He's located at the edge of the trading floor there in Chicago right now.